Hey guys, hope you're doing well and great. Alright, in this content for today, we're going to be talking about understanding the financial position of your business, right? The financial health of your business. So if you are a business owner, or it can be any business, right? But in this video, we're going to be talking about for the restaurant industry. So if you're a restaurant owner, please do watch this content because it would be helpful for you if you are in the business, right? Or if you are planning to start a new business in the food industry, this is something that's very important for you. I hope the content is going to be very helpful for you. All right, if you have any questions, feel free. Now let's get into the content for today. All right, guys, hope you're doing well and great. Okay, in this content for today, we're going to be talking about understanding the restaurant expenses and financial health. This is very important. If you are in a restaurant business and you do not know much about the financial part of your business, this is something that you want to get into and watch the entire video because I'll be sharing you a lot of information that is very much something that you are aware of it, but at the same time it is good to know if you already know, right? Hopefully this is going to be something that is going to be helpful for you. So this content is just based on the average information that we always get from the restaurant industry. So it's not something which is exactly aligned to your business, but if it's so, great. If it's not, then that's something that you can implement on it. So understanding restaurant expenses and financial health. Now, why do we have to really understand our financial health of the business, right? So here's what I would ask you to pay attention. So if you have a DPR, right, which is a daily product report, if you would like to share to me, that's going to be great. If you don't want, it's up to you. But if you do have a DPR in your business, which is going to be really, really helpful for you. What is the financial statement, right? That's something which you have to understand. So it's about analyze your financial statement, right? Including your profit and loss statement, balance sheets, and cash flow statement. Identify areas of inefficiency, cost overrun, or revenue leakage that might be contributing to consistency loss. Operation efficiency. Evaluate your operation. All right, so about this content, well, this is something that I have shared with one of these clients who asked me about all the questions about like, hey, I've been operating my business for the last 2 to 3 years and I'm not getting high margin on the business, high profit on the business. So would you be able to give me kind of more insights of the business operation in terms of the financial part? So for that reason, I have drafted some of this notes for her. Hopefully it is something that's going to be helpful for their business. So this is something that I want to share with you as well. So if you are in the business already, then this is something good to take away in this content. So now you'll be wondering, why is that in a very kind of a specific kind of a course things? It's not a course things or anything, but this is what I have drafted for her business as well. So now let's get into the content. So what I have told her, I'm just going to share you exactly the same thing. So the first thing that I asked was, do you have a DPR daily production report, right? Which is about understanding your daily sales report. Or it's not only just for the sales, it's about the inventory that you're going to be using on that particular day of the week, right? So if you do not have it, feel free to share, in the comment sections that you will need those things. And I'll be happy to kind of share with you as well the DPR, how you can structure your DPR for your business, right? So now the first thing that I've asked her is you got to focus on your understanding your financial statement very well. So what does this financial statement includes, right? So you got to analyze your financial statement, including your profit and loss statement, balance sheet, and cash flow statements. Identify areas of influence, costs or overrun, or revenue leakage that might be contributing to consistency loss, right? And also there are things that you have to really, really focus on. That's going to be the operational efficiency. So they got to evaluate the operational processing from inventory management to kitchen workflow and customer service protocols, right? To streamline operations and reduce costs without compromising quality. So many of the business does not have these SOPs, standard operations protocol, or the policy, right? So this is something they would want to create for their business, because if they do not know how to process the entire business itself, then probably there's going to be a lot of problem in the business when you are going to manage people and some of this operation stuff, right? That include your applications, your equipments, and all those the HR related things, right? So at the same time, a business is a restaurant business. They have to really focus on the menu engineering and pricing strategy. So why is it important, right? Analyzing the menu offering and pricing structures is really, really crucial, right? Assess with menu items are profitable and which might be causing losses, just to improve profitability without sacrificing customer satisfaction. So right now in the market, it's going inflation. So the price of the products are a little bit expensive compared to like the past few years. But if you try to cut corner on those things, it's probably gonna hit the customer taste and preference, and basically you're losing the quality on the product, right? So that might would just be something that you have to consider again. If it's required, you have to redesign, re-engineer your ingredients again and try to set it up in such a way that you are still providing the best things to the customer based on the taste and the preference, but at the same time you're also helping the customer to sustain that quality, so that they're happy basically. Now this is really, really important, because if you try to cut corners, see, the moment when you try to change the quality of the product, that's when the business goes south. For example, recently we see that in Orlando area, 50 stores of this the Boston market got shut down for the reason. I happened to ask one person, right? I just met randomly and asked the person that what could be the reasons. I was told like, since I'm not blaming on the CEO or anybody, but that's how the management will also try to, do the best. But at the same time, you've got to figure it out, not uncompromising the quality of the food product that you provide to your customers. So what happened was, as far as I know, was the CEO come up with kind of a lower quality, but then maybe they just increase the price, which becomes kind of an awful taste for the customer, and for that reason many customers stop going to or consuming their products or this whatever that they're selling, and so for that reason the business end up getting shut down. So that's very painful. So just because you want to cut corners a little bit here and there in the quality, you may be compromising with a lot of stuff that you don't want to really do in the business. So you've got to understand, instead of that, set a different price, set a different product category, and at the same time maintain the quality, right? That's very important. So the cost control of measure. Given your concern about high food and labor costs, set a strategy to optimize these expenses. This involves renegotiations with the suppliers, contracts, adjust portion size, improving staff scheduling, or re-evaluating menu items that are less profitable. So like I say, this is exactly what I have told or share with the business owner. That's something that they have to focus on it, right? So now I'm going to go through the next phase of how you're going to margin all those things, right? And what should be the percentage for each and everything here. And but just before we go there, I want to make sure that you understand all this part, right? So, and the other part is that marketing and sales strategies. Conduct effective marketing strategies to attract more customers and increase sales. This includes digital marketing initiative, loyalty programs, or promotions to drive revenue growth. So these are the few key factors that you have to really, really understand. And if you're thinking that marketing is not that helpful because your business is going well, about thinking this way, like, see, Coca-Cola has been the biggest company in a beverage, right? Why do they do the marketing every now and then? It's not a new product they're launching, but they're still marketing the old same brand, same taste every now and then. Think about Red Bull spend more than like 80 millions to more than 100 millions a year on their marketing. The reason is because they want to be in the market, all the time. They want to be recognized. That's how you build a brand, right? So if you're thinking that your food is good, your customer base is already built up, and you don't need the marketing, and then unfortunately you're going to be missing a lot of opportunity in your market, and people will forget you, because not half your customer will come every now and then. But people who has been to your business at least once or twice in a month, probably they might will forget about the business what you serve, right? So just for the reminder, or to show them that you were there, you always need to build your brand. At the same time, you have to stay in the market, and to stay in the market, you gotta advertise your business most of the time and all the time. That's part of the business. So if you are planning for your business without marketing, you're not gonna stay long in the business. That's for sure. That's how it works. Right? That's the way it is, right? So now looking on to the next part. So training and staff development. This is really what a business has to really understand. Training program for staff members can improve efficiency, reduce waste, and enhance customer service. Implementing training protocols to ensure your team operates at its best. So this is very important because see, everybody wants to hire new employee, new staff. So every now and then they just give like a couple of days of training, which is okay just for them to get to work. But the thing is that if you really want to operate your business in a very productive and efficient way, you must have guidelines, the training protocol for your new members in your business. And for that, as we have mentioned earlier, you would also need SOP, which is a standard operation protocol, or say would also need employee handbook, right? And that's something really important. It doesn't matter what size is your business. If you're a business, then you need those things, because down the line you're going to be hiring, recruiting people. 1 or 2 or 10 doesn't matter, right? So as soon as you're about to hire people, you will need all those things ready in your business. So that's something which you really have to kind of work on it. And now this is something that's in depth, but I'm going to make it kind of a little summary, so this video shouldn't be that long. Now consider about the COGS, right? Cost and goods sales, right? So most of the time it says in the food industry, I'm not sure about the other industry, but in the food industry, especially for restaurants or food service business, your COGS should not be it usually used to be between 23 to 25%, but then because right now we have to consider the inflation as well, which goes up to like 3 to 5% more. So currently it should not be beyond like a 25 to 27%. But if it's hitting 30%, you might want to just quickly change your menu. So because you cannot sell those high item price every now and then. I understand that there is going to be a huge demand or maybe a downfall here and there, but the business is all about taking a risk at some time and try to understand what fit the best for the business, right? That's how we have to work around. And so your COGS should not be more than like a 25 to 27%. All right, so now for the labor cost, right? Labor cost, it usually goes up to like a 33% sometime, because it also depends on, let's say, if it's in a holiday season, probably you may get, a temporary staff. Let's say in winter or summer or a spring break, you might would have a lot of, new staff who's you're going to be joining in with a very low price or very low labor cost, but that's also very variable sometimes. So if you are keeping, if you have like long-term employee, permanent employee, just make sure that those employees have, different percentage on whatever the business is generating. So, for example, if you have more than 80% of your employee who are permanent, you probably may want to just come up with somewhere around like 18 to 20%. And the rest of the 10% to 8%, you want to make it a variable for the new hire, because those are like a little lesser price in the labor cost. So that's something that you have to kind of work around at the same time. So the rent has to be no more than 10%. So in a franchise business model, it's a little bit different. But at the end, if it's an independent and you are not working in under as a vendor in a retail locations, or like let's say airport or commissary or places like that, probably your rent should be a little bit here and there, which means more or less. But in general, if your rent is above 10%, we see some problem here. So you have to figure it out, right? What is the max that you can cap on the rent percentage? Because maybe you're a startup, but then it's okay, right? You have sufficient funds to analyze understand your business for the next 6 months or 1 year, But after 1 year, or say after 6 months, if your business is not generating a revenue that can cover 10% of your rent, then probably there is something wrong, which means either you have to refocus on the marketing or just change the product or the services that your audience like, right? And the insurance, these are some of the small transactions. The insurance should be between 1-3%. This can include various type of insurance, such as a property insurance, liability insurance, worker compensations insurance, and more. So it goes a little bit high here and there based on if you want to use a work comp, but if you don't want it, then the insurance rate's gonna be a little bit less. So basically it should be like about 1% to 3% of your business. Now the utility bills also, this you gotta really have understand this, because the factors like the energy efficiency, and which is going to be the water and all those things, right? You gotta know very well that how much do you spend. So make sure this is where it applies actually. There is nothing much you can do it, but training your staff well will help you out to kind of work around on this part. Because if for example the employee goes to the bathroom and they just forgot to turn off the water, or they turn off the electrics and all those things, right? You gotta think about it. Small things can add up a lot, right? So you have to focus on all those at the same time. So training and guiding your employee when you hire help them a lot. So now the tax is always variable at the same time, right? 6 to 8% tax expenses for restaurants can be various, which include the property tax, if it is included in your rent or not, but most of the time it's not included in your rent. So the property tax, you have to still pay, right? So the sales tax is there, the payroll tax is there, income tax. You got to make sure that everything is covered with 6 to 8%. Again, depends on your location, where you're based. And the marketing. So I've already explained about the marketing in previous video as well, but for these contents, the marketing cost should not be more than 8 to 10%, I would say. And an average 4% is because if you're a franchise business and you're in the company, the franchisor is doing all the ad works for you guys, right? So the percentage of this advertisement can be up to like 3 to 5% in between, but the average for an independent can go between 6 to 8%, right? Because you are doing for your business, so that's only one location. So whatever you do, it's going to be a little higher, but the return on this investment is much profitable for you in compared to the franchise business as well. So for example, if the franchise business is, say, using about 4% of your revenue to advertise, but your location is a little bit kind of slow, probably you may not be able to generate how much you spend on the advertise. But if you are in a good location, right, you may be able to spend a good amount or get a good amount in the advertising returns, right? The advertised cost returns. So the total operations cost is somewhere 86%. Now a lot of people say, hey, the restaurants make a lot of income. Well, the percentage is low, but if you have a good sales, good high number of let's say about like 2 to 3 million a year, then probably that is going to be helpful for you. But if you are like running less than restaurant less than 100,000 a year or 250,000 a year, it's not going to be something that you should be expecting, right? So restaurant business is a good business because it's a fast consumer products, right? So basically that means that people come and buy and just consume the product within 5-10 minutes, and they need again, right? So that's a very fast consumer products. But at the same time, for the restaurant owner, if they're not generating at least a 7-figure, then probably the return would be a little bit low. And at the same time, because you're working on your percentage, that's the reason. What you have to understand is the percentage. How much is the percent that you're profiting? And now you may be saying that, oh, okay, what, I'm profiting about 15%, but what is the value of that 15%? Probably it's just about 50,000-60,000. Is it really worth? Probably yes for you, probably no for you too, right? So that's something we have to really understand. So 86% is the total operation cost. That's on an average. This does not include maintenance and repair, administrative costs, which include the office supplies, accounting service, legal fees, license permit, the technologies and software cost for a point of sale system. So if you're using a POS, that's you pay on a monthly subscription basis. That's something that you have to look into it. And then reservation system, online ordering platforms, and other technology used to manage operations or enhance customer experience, depreciations, reductions in value of assets over time, such as equipments or furnitures. Miscellaneous expenses, day-to-day expenses that may include cleaning, supplies, uniforms, training program, entertainment costs, and unforeseen miscellaneous expenses. So this is something that you have to also consider. Now the balance is out of 100%. We have the balance 14%. That's going to be something that you're going to be taking away, but you can get it more on this if you organize your system, right? So basically, you have to have your SSOP, or let's say SOM, right? DPR, and gotta develop your menu. You have to have your recipe book. The IM stands for inventory management system, and staff training manuals, waste management plans, and all those things. So if you have all these things in plan, you're gonna do very good, right? But if you are missing out on all these things, then is the margin on your profit is gonna go very low. So evaluate this list that I've shared, right? This is what it is too hard to. There are many factors to look into, so don't hide or don't be hesitate to share whatever that you are going through with your business, right? So the reason why, because I've worked with many other businesses here, as I mentioned, and there are people who makes more than like a 2 million, 3 million a year just from 2 locations. So having about like 8 staff, 2 of them are like a part-time, 6 of them are like a full-time, and they switch between the 2 stores. So this is something that you may want to go through again if you really want to understand your financial growth or financial positions of your business, because it's really helpful. If you do not understand all these things, you got to know your boat very well before you plan to sail across the ocean, because sometimes it is okay when it's shallow, when you have the funds with you to care of all this other stuff. But when you actually are in the business for a quite period of time, say about 1 year, 1.5 years, it's hard to get back into the normal life. And if you do not have this financial planning properly, and if you do not have any info to forecast your financial transactions or the targets, then it's going to be very painful. But at the same time, like I always say, guys, if you have questions, feel free to share your comments and thoughts, and also we'll leave you a 30-minute session call if you'd like to set a free call with me, and where we can assess your business and see what is the best thing that you can do for your restaurant business, right? And if you have any questions, concerns, feedbacks, comments, feel free to share in the comment section. And if you do like the content, please feel free to share to your friends and folks, and subscribe to the channel. Alright guys, until the next content, you guys have a good day. See you again. Cheers.